What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. And those up to 12 free stocks could be valued up to $30,600. There's a link in the description box of the video. Go click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. April 7, 2023. We got the March jobs report. And that jobs report was actually pretty dang on good. 236,000 new jobs were added to the economy. But that was expected. But what we did realize is there is a decreasing trend in jobs being added to our economy since the beginning of this year. And that's good news. That tells us the Fed rate hikes over the last year and a half have been working. See, we need this red hot labor market to cool off just a little bit so that we can get inflation under control. And you guys know, I say this all the time, the Fed's number one priority is getting price stability back in our economy. Without price stability, people in our country, lower income folks, even some middle income folks, are not able to afford the basic essentials they need to live. So that is the Fed's number one priority. And with those rate hikes over the last year and a half, it's forcing that red hot labor market to start cooling off. Now we have another important date this week, which is April 12th. The March CPI report will be coming out, and the CPI report will give us a good indication of what inflation is doing. Again, guys, we've made a lot of progress on bringing inflation down. Beginning of the year, inflation was 6.4%. That was in January. In February, it came down to 6%. Now, here's the big question. What will it be on Wednesday? Well, everyone is hoping it stays below 6%. Really, 5.5% would be fantastic. But we'll have to wait and see. One thing I can tell you though, the Fed is eagerly waiting to get that data. See, the Fed will be meeting in May. And in May's meeting, they have a decision to make. Do we increase short-term interest rates for the 10th time in the last year and a half? That's the question. The market believes they will. So that's already priced in. 25 basis points is priced in. But I think though, depending upon what comes out in the March CPI report and some additional data that will be coming out prior to the Fed meeting in May, that'll determine what they do. I think the baseline rate that they're looking to target when it comes to short-term interest rates or the Fed funds rate is around 5.1%. If the data that comes in, CPI report for March, which is coming out on Wednesday, and some more data that'll come out before they meet in May, they may stop raising short-term interest rates and do what? In the second half of the year, they may even start reducing short-term interest rates in order to kind of give the economy a little bit of a shock, a boost. Hopefully that is what we will see. I don't know, guys. I don't have a crystal ball. I'm just a guy on YouTube giving you my opinion. And you guys know my channel is about giving you my opinion. I'm an expert at giving my own opinion. This is not a convince you channel. So I'm not trying to convince you of this. I'm just giving you what my take on it is. I always encourage you guys, get out online and do your own research, do your own due diligence, and come up with your own conclusion. And perhaps even make your own YouTube video and let me know you made it. Send me a link, and I'll be more than happy to watch it and give you a thumbs up if I like it. So yeah, man, I think right now we're in a unique place in our economy. We're still in a bear market in the stock market. Real estate market is still sort of in limbo, right? I think prices have come down in most parts of the country. Slightly, they've come down over the last 6 months. Inventory is still low. So that's sort of what's propping up prices for existing homes. We don't have a lot of new construction. Why? Because interest rates are 6% for 30-year fixed rate mortgage rates, and no home builder wants to put their neck on the line if they don't believe they're going to have buyers for these new construction homes that they build. So they have slowed down. They've stopped and they're not doing as many new construction homes. And I don't blame them, because with interest rates at 6% for 30-year fixed rate mortgages, loans, there ain't a lot of people who can qualify for a mortgage. The average price of a home in the United States is around $460,000. That's the average price. And when you do the math, even when you put your 20% down, at a 3% interest rate, you're doing pretty good. But if you bump that to a 6% interest rate, you've just increased your loan payment by $800. That's the difference between a 3% fixed rate loan or a 6% fixed rate loan when you're talking about the average cost of a home being around $460,000 minus your 20% down. So yeah, man, most people can't afford that. You just can't pull it off, right? So inflation is one of the reasons why 30-year fixed rate mortgages rates are 6%, because they're indirectly tied into short-term interest rates, right? The short-term interest rates influence the 10-year treasury yield. And that's what your 30-year fixed rate mortgage is based on, is that 10-year treasury yield, right? So if the Fed decides second half of 2023 that they're happy with the progress of inflation coming down, and they say, well, you know something? Yeah, in the next Fed meeting, let's consider reducing the short-term interest rate. That will kickstart the economy, because what it will do is it will free up now more Americans to be able to go out and buy new homes, which in turn will help what? The economy. It'll help the housing market. And I know a lot of people are saying, well, the housing market doesn't need any help. It's already overinflated. Listen, guys, our economy is not going to flourish unless we have a healthy housing market, just like it won't flourish unless we have a healthy labor market, right? Investors won't feel comfortable investing in companies unless we have a healthy stock market. So all of it is intertwined, guys. I don't want us to be in a position where everything is so overpriced that people can't afford it. Our economy won't be able to sustain that. But at some point, you got to reduce interest rates in order to get the economy going again, right? The whole point of increasing interest rates is to slow down the economy so that inflation can come down, right? So that's what's been going on, but we got to get past that at some point. And I think if we keep getting good news about inflation coming down, I think the Fed is going to stop increasing short-term interest rates. And then on the second half of 2023, they may even do one reduction just to give the economy a kickstart going into 2024. That's my prediction. Drop me some comments down in the comment box and let me know what you think is going to happen with the Fed and increasing short-term interest rates. Love to hear your perspective down in the comment box. So drop them comments. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.